All right, guys, you are welcome back to my YouTube channel. Right, this is another day for me to explain some concepts to you. Right, it's not a tutorial or like that. Right, it's just for me to explain those trades that I have sent to my page. Right, and many of you would have seen that I upload some before and after chart on my Telegram channel. Right, so I have decided, I pray I'll be able to keep this, right, to explain some of those trades and how they were picked. Right now there might be some shady stuff from it. I mean, that shady activity will be me not disclosing everything that I do. I will just explain to you what it is, but not in depth. But it's just for you to have an understanding of how the trades were selected and traded, and for you to know that anything is really possible in this market. All right, let's quickly go into the details. Right, the first trade I'm going to explain, right, is CHF right? CHF as you can see, right, this is 4 hour time frame, right? I traded this pair, and this is how I saw this pair, right? I would like to share the before chart of this to you, right, so that you can see it. This is from my Telegram, right, from my Telegram. As you can see now, what did I see on this pair? I saw price accumulating up, right, and I also on the 50 minutes time frame, uh, uh, I saw price also accumulating, but this was on a Friday. As you can see this, then I was expecting accumulation to continue on a Monday for me to see the reversal. But on Monday, right, let's go to the chart now. This was before of this chart, right, on Monday of this particular trade. Now this was a Friday that you can see, and this was where I spot that trade. I was expecting that liquidity grab to happen, then also that accumulation to the high on the Monday morning. But as you can see on Monday, this did not happen. Right, price just continuing to drop down. All right, now for a buy to sell, sell to buy to sell trade, right, we would have really picked a trade around this, but I'm not going to explain that. But eventually market came and gave me that liquidity that I was really expecting, as you can see. But this was not really in my uh strict trading hour, right? So but the next one was really picked in this particular zone. Now this was also not in my trading hour, but it's some of the trading hours that I always consider, right, which is really Asian section, right? I mean the late hours of Asian section. So as you can see on this very day, now I use 30 minutes time frame because 30 minutes time frame now make me to see the pattern clearly, the pattern I was looking out for. That's my 3E structure, and this give that trade I was looking for, and this was the zone I picked my entry from. All right, then as you can see, right, on the I picked this trade from 1 minute time frame. All right, let's wait for this pair to really go down now. I picked the trade from 1 minute time frame, and this trade was on the Tuesday on 1 minute time frame. Now I also saw my same structure pattern, the same structure pattern right around this area, right? It gave me a 3 8 price was also accumulating, as you can see that, right? People would have called this white off, but I have a way that I designed my own pattern and I see it clearly. Now after seeing that, then I see price breaking down into this, then I see this particular price action break market structure here. Then this is an NOB. I would have marked this anyway, as many people that would have marked this to pick an entry, maybe this particular hit would have actually taken them out. But there is something we call NOB, right? I've already noted that before in one of my webinars, right? NOB, right? So when I saw that, right, when I saw that, I know that okay, there is a tendency that price will come back to it, right? So this my NOB was what I use as an entry. Then the entry was taken at the 50% of that zone, and that was how these trade were taken. And as you can see, we have a stop loss, right? One about one pip. Then on the 4 hour time frame, was looking at this particular rejection zone right in here, and it was refined into um 15 minutes time frame or 30 minutes 15 minutes time frame. Now this was what I saw, but majorly the 30 minutes time frame. All right, so that particular zone now serve as my rejection, as you can see. serve as my target zone for the week, right? Price pull back into this, and that was how I picked this particular trade. As you can see there, now you will see the before chart. Let me quickly share that and see after chart of this particular pair. Right, this was the aftermath of it. Right, as you can see, this was where the entry was taken, and this particular gray box is what I just drew now. Then you can see the target in there. So the entry, right, the target, 1 pip stop loss, and about 1 to 90 risk reward ratio that this trade really gave. Okay, so the next pair I'm going to discuss today is USD JPY. Right, I actually didn't mark the before chart of this, but I will just explain the concept behind this. Right, on the 4 hour time frame. Right, on the 4 hour time frame. Now, this was a weekly weekly trade. Right, all right, it was a weekly trade. Now, if you zoom out the price, I mean, just zoom in, make the candle bigger, right? On my main trading platform, which is actually Tickmill, right? This candle wasn't like this. If you actually see the candle, the chart I sent, right, which was the aftermath of it, you will see how that candle was painted. But however, on the 4 hour time frame, this is how it looks on this particular time frame. I mean, on this particular block, but on my tick mail, this was not how it looks like. So I refined this zone, this particular candle, to my 1 hour, the body of the SOB here, right? So my entry using my pattern I was actually looking out for, I saw my three structure 1, 2, 3, and I saw that then my entry was in this particular zone on the 1 minute time frame, right? On the 1 minute time frame. Let's quickly go there. That was why I picked my entry from. So let me show you what I saw on this 1 minute time frame. On the 1 minute time frame, I also saw price accumulating up, then price pull back into that zone. Then all this particular zone, when market hit this zone, I couldn't get an entry, no doubt, because there is no market structure in there. The market gave me that clear pattern in this particular zone. So with this, I saw the impulsive move that break market structure. So this particular candle now becomes, now in my trading, in my tick mail trade also, that was the reason why I actually stopped using this particular platform, because it's not really very awesome in the way I was actually looking for it. Now, if you see my trade in here, it has a very perfect entry. Let me quickly show you that. Um, that's USD As you can see, look at how this candle painted, and look at how ice market really painted. So some of those spiky things, and one of the reasons why I actually stopped using them right lately, right? As you can see, look at the price action here, and look at the price action there. Assuming I was taking these trades in these two broke out, right, I would have been stopped out. So with this, you can see the stop loss that this trade would have given us. Yeah, so I'm going to use that tick mail to really explain to you. I'm not using my tick mail to really explain stuff here. So the entry was there, and let's say the stop loss was around, the stop loss I took was around 0.6, right? 0.6 stop loss, right? If you actually take your entry from here, and your target, you're going to use 4 hour time frame that you use as your bias, as your target now, which is this particular low, right? 0.6 pip stop loss, then targeting this particular low, that's about 75, right? So your risk reward ratio, right, will be about 1 to 125 risk reward ratio that you would have picked from this trade. However, if you are one of my students that always use ORP, that's overall pip for the week or overall pip for the day, then this is, you are going to be closing your trade on the Friday, and you're going to get 92 pips. Then at the end of the week, you should close your profit with about 1 to 153 risk reward ratio. 1 to 153 risk reward ratio. So it might actually sound crazy that, oh, all this risk reward ratio that people are really getting, but that is not really a big deal, right? What you think is not possible is not really possible, and if you think that is possible, really is really possible. So that's the point. Oh, so you shouldn't really blame people that are really doing that. Now you can see the first trade I showed you with the second trade I showed you, they are the same. You can see based on the rules, right? So if you are telling me, oh, show your result, oh, show your this thing, that's just your own cup of tea, right? If you can practice the same rules I've given to you, you will see the same results coming to pass in your own very own site. So this is actually very simple stuff to really consider, right? So the last trade I'm going to talk about today, right, to explain that, is it will be GBP NZD, is among the trade I have shared also on my Telegram page. Right. So these are a USDJPY, shared USDJPY, I shared AUDCHF. As you can see, the same concept, the same as you can see my 3E structure being formed here. You can see my liquidity graph here. You can see I took my entry here. Right. Euro AUD, the same concept was formed. As you can see, how this trade was picked. Right. This particular zone, I would have used this as an example, but I just decided not to use it because there's a particular method I used there that I have not really disclosed to the public. All right, but the same, still the same entry pattern anyway. Then this Euro NZD is what I'm going to explain. I mean, Euro GBP NZD is what I'm going to explain now. Then you can see the same concept was actually presented in this particular zone. So awesome trade, awesome idea, and just same rules and same pattern. As you can see, this is what I'm going to explain now. So in case IC markets have another price action, so you will know how that really looks like. So to start with, on GBP HZD, I started with a 4-hour time frame. Then what did I see? I see price coming back in a compressed manner into this particular zone, the LC of my MBB. Right, that's multiple break block. Right, I saw price moving back in a compressed manner. So on the 15 minutes time frame, I have my clear accumulation, right, which is actually price compressing to the high, then giving me my 3E structure. As you can see it here, very clear. So you can see 1 to 3 into that zone, price was accumulating a very clear reversal pattern. Right, price took out this liquidity, right, which is my third hit, my ELPC rules. Right, you can see 1, 2, 3, the same thing I have been doing in all those trades that I've really presented. Then I will go to 1 minute time frame to pick my trade. Right, because if I'm trading monthly, if I'm trading weekly, if I'm trading daily, any time frame whatsoever I'm trading, my entry will really go down to 1 minute time frame. So let's go to 1 minute time frame now on the 13th. Let's see 10. So they are so good trade, right? If you don't believe it, right, you don't believe it, and if you believe it, right, you believed it. So it's just a choice, right? And it's something that you guys can backtest. You can see how things really worked out and how you can also work with it. So what did I see? Now this was the last E that really take place here, and I saw price breaking down here. Now this would have been my entry, but my rules was unfulfilled there because I love seeing the impulsive move that break market structure, but this didn't really give that. So price move up here, then actually give another one here. Not right. So this particular zone was the first entry, which was really invalidated. Then this other one here was the second, right? The MBB, right? Although this is an NOB anyway, as you can see, so this is not really totally out of place for me to pick my entry. So the NOB, I was looking for the 50% of that zone. All right, this was the 50%. Then as you can see, now you would have asked a question that, okay, if you are using tight stop loss, are you not going to be taken out with spread? Right, we always figured out spread into our stop loss. So there is no how spread. Even I had additional people. There is a way I do my calculation that will not really affect me. And another announcement I'm going to make to you is that I don't risk 1% of my account. I risk 0.5% of my account. That's actually what I risk. Then my target, right, 0.25. That's what I always risk. Then on each trade, at least I did not make anything on each trade. I will make 5% of my account on that trade. Right, that is me going from 1 to 20 risk reward ratio as my first target. So after then I will let my trade to run till whatever RL that is going to give me at the end of the day or to my target zone. So this is what I'm really looking out for. I'm not really greedy. I'm not even greedy at all. As you can see, I'm managing my money to the uh to the uh to the maximum or to whatever maximum thinking that you can actually consider. So as you can see, that is where I picked my trade. And this stop loss now, the stop loss of this trade was about 2.5. You calculate that 2.5 p. Then your target will be the next liquidity zone, right? Target zone, that's going to be our target, right? Next liquidity zone, that's about 158. If you check that, then that's going to give you about 163 risk reward ratio. But if you want to let it run to the end of the day, right, to the end of the day, I mean to the end of the week, right, this is where you're going to take close your trade about 220 pips, right? 220 pips would have given you 1 to 80 risk reward ratio that you're going to close your trade out. It's an awesome trade and awesome ways to really take your trade, right? So this is what I have for you today. All right. Anytime you get this, right, as many of you that want to apply for the mentorship, right, is I would not say it is closed because we are not going to make any announcement for that. The next time we're going to make an announcement, it might really uh, increase. We actually have increase in price, right, because of some other expenses that that we are making while teaching you. So until next time, all right, I'll see you later. Bye bye and take care of yourself.